So today topic is property income. Property income, is a rental income. Mean when you let out the house to tenant and tenant will give you rent every month. So rent is your property income. And property income will go to non-saving column. So now my question is how to calculate the property income. So in this chapter, firstly, you can see the topic names and then one by one we will discuss all these topics. So you can see the list of topics. First topic, property income calculation, how to calculate the property income. We will discuss this topic. Second, replacement furniture relief topic. Third, lease, and there are two types of lease. Head lease mean normal lease and sublease. Next topic, room relief, and then real estate investment area. This topic we will also cover in this chapter. So now first topic, property income calculation. How to calculate the property income? So there is a format. So when you let the house tenant, how you will calculate your property income? The format is rental income for the tax year. For example, the tax year 2021, rent minus all allowed expenses related to the house. What are the allowed expenses? For example, repair and maintenance expense you can deduct from your rent. Maybe you will advertise your house, so advertisement expense you can deduct. Insurance, for example, you are paying insurance expense, so you can deduct. For example, you will pay the agent fee or commission, you can also deduct. Water rates you can deduct. Mileage allowance, mileage allowance means you are using your personal car to collect the rent from tenant. So obviously when you drive some miles, then that expense you can also deduct from here as an allowed expense. Okay. Bad debt.
Yes, ma'am.
Bad debt mean, for example, your tenant left the property without paying you rent. For example, last month rent he didn't pay and he just left. So that rent is bad debt. So bad debt you can also deduct as an allowed expense. Next, council tax. In UK, the council who will charge the property tax. It's called council tax. You can also deduct. And then 25% interest on loan to acquire the property. Please just delete this line. It's not applicable now.
Okay.
Council tax, there is a line 25% interest on loan. Please delete this.
Okay, ma'am.
Okay. Next, deduct replacement furniture relief. Replacement furniture relief, what is this? We will discuss after this topic. But you are replacing the furniture in your property. And replacement cost you can deduct from here as an allowed expense. And then you will get the taxable property income or property loss. Property income, go to the non-saving column. And if there is a property loss, you can set off the loss. And how to set off the loss, I will discuss later on. Okay, next. So that is the format. Now the topic next is replacement furniture relief. It's allowed expense and you can deduct from property income format. Now what is this? So furnishing or furniture include items such as beds, carpets, coverings, curtain, washing machine, crockery, cutlery, fridge, freezer, television. You know, all these things you are using normally in your house, you know. So these are the normal
Yes.
things we use in our house. So when you replace these things, you will get the replacement furniture relief. That's it. Second point, no relief for initial cost. Relief available only when assets are replaced. Mean first time, initial cost mean first time when you purchase the bed, curtain, washing machine, crockery, freezer, fridge, television. Mean when first time you buy these things, you cannot deduct as an allowed expense. But when you replace these things with the new one, then that cost is you can deduct as an allowed expense. Got it?
Yes, ma'am.
So initial cost is not a relief, but when you replace, then that is your relief and you can deduct that cost. Next, third point, no relief for any kind of improvement of asset. Means any kind of improvement of asset. Mean for example, your old washing machine cost £1,000. Okay, and you are replacing it with new type of washing machine, for example a more improved washing machine. More improved as it mean 2 days washing machine, just like washer dryer will be attached. Mean more features are improved. So for example, you are replacing it with a new washing machine with more features. Improved asset means more features, and that costs you £1,500. So tell me, mean up to how much amount you will get the relief? The point,
Mm,
the point is saying no relief for any kind of improvement of asset. So you are improving, you are buying a new improved asset and cost £1,500. So how much relief is restricted? On how much
I
amount?
think it's restricted on 1,000.
Yes, very good. So up to old asset cost, you can get the relief. So up to 1,000 you can deduct from your rental income as an allowed expense. Very good. Next, reduce the last point. Reduce the relief by proceeds of old asset and cost of new asset, and the difference between them is used as a relief. Means, for example, you are selling an old washing machine costing 1,000, and you are purchasing a new washing machine costing 2,500. So how much relief you will get?
Mm, I think 1,500.
Very good. So it means the sale proceeds of old asset will reduce the relief. So 2,500 is cost of new asset minus sale proceeds. Then up to 1,000, I think 1,000 you will, sorry. It's proceeds are 1,000 and now you will get the 1,500. So this 1,500 you can deduct from your property income, rental income. Clear?
Yes, ma'am.
Okay. That so that is a replacement furniture relief topic. Next, finance cost. You know, uh, I will make some changes here. So you just write down. Mm. Finance cost mean interest paid on loan. Whether a loan is taken to purchase residential property or is taken for repairs only, just cut this line, second line, just cut.
Okay.
And I will just tell you the new line. Please hold on just 1 minute. I am sending you a page and you can
Okay.
write down on your notes. So please cut down everything. It's changed now.
Okay.
And in CGT, your annual exemption is 12,300 new CGT. You can check all these things in your uh, rates. In the QTAR book, you can see the rates, first 2 to 3 pages on rates, updated rates.
Yeah, yeah, yeah.
So you can match all these things.
Okay, ma'am.
Okay, just give me 1 second. I'm just searching one page and then send you.
Okay.
Okay, so you received property income finance cost page. I am reading on WhatsApp. Please see.
Yes, ma'am.
For the tax year 2021, tax relief for 100% of finance cost in respect of residential property, such as mortgage interest, is restricted to the basic rate. Mean 100% finance cost. Finance cost mean the interest expense which you are paying on loan. You can deduct 100% interest, apply the basic rate on 100% finance cost. You can deduct as a tax relief. Tax relief mean you can deduct from your income tax liability. Income tax liability, all rates when you apply, and the final answer you will get the income tax liability. From that liability you will deduct 100% of finance cost. For example, 4,000 interest expense you are paying on loan. So on all 4,000, apply the basic rate 20. And the answer, whatever you answer you get, you will deduct it from your income tax liability. Your income tax liability is reduced from that amount. So it's a relief for you. Okay. So
Yes, ma'am.
finance cost on all 100% finance cost, you apply the basic band 20% rate and deduct it from your income tax liability. That's it. That is the whole concept. Simple. Next paragraph. It
Yes,
makes
ma'am.
no difference whether the finance was used to purchase the property or was used to pay for repairs. The restriction does not apply where finance costs relate to a furnished holiday letting or to non-residential property such as an office or warehouse. The restriction only apply to individual and not to limited companies. The restriction has no impact on basic rate taxpayers. And the 100% finance cost restriction will be given in the tax rates and allowances section in the examination. So simple concept is, okay, so when you get a loan, and on that loan, if you pay the interest, mean finance cost, and on that interest, you will pay, apply the all interest 100%, apply the basic rate, and used as a tax relief. So, please open the next page. I send you uh, already. I am just telling you the example 20 now. Please open example 20.
Okay, ma'am.
On 6 April 2020, Fang purchased a freehold house. The property was then let throughout the tax year 2021 at a monthly rent of 1,000. So what is the whole rental income, whole tax year rental income? It's a monthly rent 1,000. Then what is the rent, property income for whole tax year?
12,000.
Yes. Next paragraph. Fang partly financed the purchase of the property with a repayment mortgage, paying mortgage interest of 4,000 during the tax year 2021. So what is interest finance cost?
Ma'am,
4,000.
I can't see the next page.
No, I sent you on WhatsApp already. Example 20, Fang.
Oh, okay. Thank you.
Okay. So next paragraph, second, 4,000 interest you are paying. So now tell me, on all this interest, 100% of interest, apply the basic band rate, 20%, and deduct it from your income tax liability.
Income tax. Yes, ma'am.
Next, third paragraph, the other expenditure on the property for the tax year 2021 amounted to 1,300, and this is all allowed. Mean that is allowed expense. You can deduct it from your rental income to calculate the property income, and then place in the non-saving column property income. Okay. Now,
Yes, ma'am.
for the next year 2021, Fang has a salary, mean employment income 80,000 in this question. So in this question, there are two types of incomes of Fang. One, property income, you have to calculate, and the second one is salary, employment income, and you know both
Payment
income will go to the non-saving column. And what is the requirement? Requirement is not given here. Please write down. Calculate the income tax liability. What is the requirement? Calculate Fang's income tax liability. Okay.
Okay. Yes, ma'am.
Okay. So can you see my screen? I am writing now the answer, and you just tell me. Tell me what will be the answer. Okay.
Okay.
Just give me 1 second. Okay. So you have to calculate the Fang income tax liability for the tax year 2021. But firstly, you have to working one, we have to start, and property income calculation we have to do. How to calculate the property income? Rental income minus all allowed expenses. So rental income 1,000 multiplied 12. So what is your rental income?
12,000.
Less all allowed expenses. What is the allowed expenses list in the question? Only other expenses 1,300. Other expenses 1,300. And what is your property income now?
10,700.
700. And you know property income will go to the non-saving column. So make the non-saving column property income working one. You can refer working one, 10,700. And any other non-saving income given in the question.
Yes, employment income.
Very good. Employment income, which is 80,000. So what is the total income now?
90,700.
Okay. Less personal allowance, 12,500. And what is your taxable income?
78,200.
78,200. Now up to basic band 37,500, rate is 20%, is equal to 7,500. And just remember this 7,500 always be fixed. So you can remember this. And
Yes, ma'am.
remaining amount will fall in the higher band, which is 40,700 into 40%, 16,280. And total income tax liability will be 23,380. Now from this income tax liability, you will deduct the interest relief. Interest relief. 4,000 in 100% of interest amount into basic band rate 20%. So 800 you can deduct as a relief. So what is your remaining income tax liability? It will be
22,580.
22,980.
22,380. 22,580. 22,580.
23380 minus 800. Is it not right? 23380 minus 800. Done?
22,580.
Okay. Okay. So have you done? Hello? Hello? Can you hear me? Hello?
Hello?
Yes, can you hear me now?
Yes, I can hear you now.
Okay. So next topic is lease. You know, before telling you the concept of lease, I just want to tell you firstly, you know, when you let the house, there are two type of lettings. You can see the sketch. Letting on the right side, if you the type of letting in which property rights not transferred. I mean, for example, when you let the house to tenant, obviously you are landlord, tenant will follow your terms and conditions. He will not use your property according to his choices. Okay.
Yes, ma'am.
So when property rights not transferred, it's called normal letting or short term, and it's for short time period. I mean, tenant will not live for whole life. Okay. And on the
Yes,
other
ma'am.
hand, the letting in which property rights transferred, it's called lease letting, and it's for long time period, long term. I mean, for example, you will let the property and now tenant will have all the rights. He can use your property according to his choices. Maybe he will use for business purpose, for residential purpose. So it's his choices. So it's called lease letting. And for example, when you rent out your property on lease, obviously you will get some money in return. Okay, so this money is called lease premium. So you can see the definition of lease premium. Lease premium are paid when property is letted out for major time period. Lease premium is money, income for you. So obviously tax department will say that pay the tax. So how to pay the tax on lease premium? You can see the second sketch, lease premium. In the right side, you can check firstly whether it's a more than 50-year lease, or on the left side, it's a less than 50-year lease. So right side, if you will, if the property on lease is more than 50-year lease, then obviously, for example, you are letting your property for 100 years, 80 years, in more than 50 years, you will let the property on lease. It's a long time period. After 100 years, you don't know what will happen. So in the eyes of tax department, it is considered as sale. You are selling your property, okay? In the eyes of tax department,
Yes.
it's a long time period. So tax department will treat it as a disposal. And when you dispose something, which tax you will pay? Capital gain tax, CGT. So on the lease premium, you will pay the CGT. Okay. Now on the left side,
Yes, ma'am.
if you let the property on less than 50-year lease, then you will make two treatments on premium. Two treatment mean, on the right side you can see the arrow. Partially you have to consider the property as disposed. So on that part of premium, just pay CGT. And CGT part we will do later on in CGT chapter. So how to pay the CGT on lease premium, we will discuss in CGT. And on the left side you can see, partially you will consider your property as let out. And when you let out your property, you will receive rental income. So on rental income, which tax you will pay? Income tax. So on that part of premium, you will pay the income tax. How to pay the income tax on lease premium? You will see the formula. Premium received less 2% into n minus 1 into premium received, and then is equal to taxable premium you will get. And this taxable in premium mean that is your rental income, property income. This premium will consider as your property income. Hello. Hello.
Hello.
Yes, sorry, I think there was some internet issue. So
Okay.
just give me 1 minute. Okay. So, the, the part which you are considered property as let out, partially you are considering the property as you let out.